Welcome back, traders. It's great to have you here again. Today, we're diving deep into one of the most crucial aspects of trading, the psychology behind it. Understanding the mental game is key to becoming a successful trader. It's no secret that trading is as much about mastering your mind as it is about mastering the markets. The mental aspect can often be the difference between success and failure. You can have the best strategy in the world, but if your emotions are controlling your decisions, you're setting yourself up for a wild and likely unprofitable ride. Emotional control is paramount. Here's the thing: fear, greed, excitement, panic. These are all normal human emotions, but in trading, they can be your worst enemy. Recognizing and managing these emotions is essential. That's why I'm sharing 5 essential psychology tips to help you stay sharp, disciplined, and ultimately, more profitable in the long run. These tips are designed to help you maintain a clear and focused mind. These are the principles that have helped me and countless other traders achieve consistent success in the markets. By incorporating these tips into your trading routine, you can improve your performance significantly. So if you're ready to level up your trading game and develop the mental edge you need to thrive, grab your notebook and let's get started. Remember, the journey to becoming a successful trader is as much about mental preparation as it is about market analysis. Look, we've all been there. You're sitting in front of your computer, watching the stock market, and suddenly you see a stock skyrocketing. Your heart starts to race and you feel a rush of excitement. You don't want to miss out on the gains, so you quickly jump into the trade without a second thought. This is a classic case of FOMO, the fear of missing out. It's a powerful emotion that can cloud your judgment and lead you to make impulsive decisions. You see others making money and you want to be part of it, but in your haste you forget to analyze the stock properly or consider the risks involved. FOMO kicks in, the fear of missing out, and suddenly you're jumping into a trade without thinking twice. You might get lucky and make a profit, but more often than not, these impulsive decisions lead to losses. The stock might not perform as expected, and you end up regretting your hasty move. Or maybe it's the opposite. A stock you own starts to dip, and fear takes over. You watch the price drop, and panic sets in. You start to worry about losing more money, so you decide to sell. But in your panic, you sell at a loss, only to watch the stock rebound later that day. It's a frustrating experience, and it happens to the best of us. You panic sell at a loss, only to watch the stock rebound later that day. This is another example of how emotions can hijack our trading decisions. When we let fear, greed, or excitement dictate our moves, we throw our strategy out the window and open ourselves up to unnecessary risk. These are classic examples of emotions hijacking our trading decisions. Emotions are powerful and they can easily cloud our judgment. When we let fear, greed, or excitement dictate our moves, we throw our strategy out the window and open ourselves up to unnecessary risk. It's important to recognize when emotions are taking over and take steps to manage them. When we let fear, greed, or excitement dictate our moves, we throw our strategy out the window and open ourselves up to unnecessary risk. The key here is to detach your emotions from your trading decisions. This is easier said than done, but it's crucial for long-term success in the markets. The key here is to detach your emotions from your trading decisions. One way to do this is to have a solid trading plan in place. Your plan should outline your entry and exit points, as well as your risk management strategies. Stick to your plan no matter what the market is doing. This will help you stay disciplined and avoid making impulsive decisions based on emotions. Remember why you entered a trade in the first place. Stick to your plan. Your strategy should be based on logic, analysis, and risk management, not on how you're feeling at any given moment. If you find yourself getting caught up in the heat of the moment, take a step back. Close your trading platform, go for a walk, clear your head. Your strategy should be based on logic, analysis, and risk management, not on how you're feeling at any given moment. Take the time to analyze the stock, consider the risks, and make a decision based on facts, not emotions. This will help you make more informed and profitable trades. If you find yourself getting caught up in the heat of the moment, take a step back. It's important to recognize when emotions are taking over and take steps to manage them. Close your trading platform, go for a walk, clear your head. This will help you regain your composure and make more rational decisions. Close your trading platform, go for a walk, clear your head. Taking a break can help you regain your composure and make more rational decisions. Remember, impulsive decisions rarely lead to profitable outcomes in the markets. It's better to take a step back and reassess the situation than to make a hasty decision that you might regret later. Remember, impulsive decisions rarely lead to profitable outcomes in the markets. Stay disciplined, stick to your plan, and don't let your emotions control your trades. Trading is a marathon, not a sprint. It's about making consistent, well-thought-out decisions over time. By detaching your emotions from your trading decisions, you'll be better equipped to navigate the ups and downs of the market and achieve long-term success. Stay disciplined, stick to your plan, and don't let your emotions control your trades. Trading is a marathon, not a sprint. It's about making consistent, well-thought-out decisions over time. By detaching your emotions from your trading decisions, you'll be better equipped to navigate the ups and downs of the market and achieve long-term success. Let's face it, nobody likes to lose money. But here's the hard truth about trading. Losses are inevitable. Even the most successful traders in the world experience losses. It's simply part of the game. The difference between those who succeed and those who don't is how they handle those losses. Instead of viewing losses as failures, see them as valuable feedback. Every loss is an opportunity to learn and improve your strategy. Ask yourself, what went wrong? Did I follow my plan? What could I have done differently? By analyzing your losses, you gain valuable insights that can help you avoid making the same mistakes in the future. Remember, trading is a marathon, not a sprint. Focus on the long-term goal of consistent profitability, not on winning every single trade. In the age of instant gratification, patience isn't exactly a virtue we're taught to embrace, but in trading, patience is non-negotiable. Think of it like this. Every time you enter a trade, you're essentially placing a bet. And just like in poker, you don't want to go all in on every single hand. You wait for the perfect opportunity, the high probability setup that aligns with your strategy. If you don't see a setup that meets your criteria, guess what? You don't trade. It's that simple. It's better to sit on your hands and wait for a high-quality opportunity than to force a trade out of boredom or impatience. Remember, every trade you take carries risk. By waiting for the right setups, you're minimizing your risk and maximizing your potential for reward. Discipline is what separates the amateurs from the professionals. If you're serious about improving your trading, keeping a journal is non-negotiable. This isn't about just tracking your wins and losses. It's about diving deeper into the why behind your trades. Before you even enter a trade, write down your thought process. What do you see on the chart? Why are you entering this trade? What's your profit target? What's your stop-loss level? Then, after the trade is closed, whether it's a win or a loss, take the time to analyze it. How did you feel during the trade? Did you follow your plan? What did you learn from this experience? By consistently journaling your trades, you'll start to notice patterns in your behavior and decision-making. You'll see what's working, what's not, and where you need to improve. It's like having a personal trading coach right at your fingertips. Let's be real, trading can be incredibly stressful, even for the most seasoned professionals. The constant ups and downs, the unpredictability, and the sheer volume of information can be overwhelming. It's not just about numbers and charts, it's about managing your emotions and staying calm under pressure. The markets are constantly moving, and with that comes uncertainty, risk, and the potential for both big wins and tough losses. Every decision you make can have significant consequences, and that weight can be heavy. It's easy to get caught up in the moment and let fear or greed drive your actions. That's why it's crucial to prioritize your mental health and build resilience. Mental resilience isn't just about being tough, it's about being adaptable, staying focused, and maintaining a positive outlook even when things don't go your way. It's about bouncing back from setbacks and learning from your mistakes. Think of it like training for a marathon. Just as athletes train their bodies to endure long distances, traders need to train their minds to handle the emotional and psychological demands of the market. It's a long-term commitment that requires dedication and practice. You wouldn't expect to run 26.2 miles without proper preparation and recovery, right? Trading is no different. You need to prepare yourself mentally and physically to perform at your best. This means developing a routine that supports your well-being and helps you stay sharp. Make sure you're getting enough sleep, eating a healthy diet, and exercising regularly. These basic self-care practices are the foundation of mental resilience. When your body is well-nourished and well-rested, your mind is more capable of handling stress and making clear, rational decisions. These things might seem insignificant, but they have a huge impact on your mental clarity and decision-making abilities. A healthy body supports a healthy mind, and a healthy mind is essential for successful trading. Don't underestimate the power of small, consistent habits, and don't underestimate the power of taking breaks. Stepping away from your screens and giving your mind a rest can prevent burnout and help you return to your work with a fresh perspective. Breaks are not a sign of weakness. They're a strategic tool for maintaining your mental health. Step away from the charts, take a walk, or simply close your laptop for a few minutes. These small actions can make a big difference in your overall well-being. Spend time with loved ones, engage in activities that bring you joy, and allow yourself to disconnect from the market. This balance is crucial for maintaining a healthy mindset. Pursue hobbies that bring you joy. Whether it's painting, playing an instrument, or any other activity that makes you happy, these moments of joy can recharge your mental batteries and improve your overall outlook on life. Remember, a calm, well-rested mind makes better decisions than a stressed and exhausted one. When you're calm, you're more likely to think clearly, stay focused, and make decisions based on logic rather than emotion. Take care of yourself, and you'll be amazed at how much it improves your trading. Your mental resilience is your greatest asset in the market. Nurture it, and it will serve you well. So, there you have it, 5 essential psychology tips to help you level up your trading game and achieve consistent success in the markets. Remember, trading is a journey, not a destination. There will be ups and downs, wins and losses, but by mastering your mindset, developing discipline, and focusing on the long game, you'll be well on your way to achieving your trading goals. Now I want to hear from you. Which of these tips resonated with you the most? What are some of your biggest trading psychology challenges? Share your thoughts in the comments below, and if you found this video helpful, don't forget to give it a thumbs up, subscribe to the channel for more trading insights, and hit that notification bell so you never miss an upload. Until next time, stay disciplined and happy trading.